Hey traders, welcome to our Sunday live show. We're going to take some questions as always, take a peek at the way in which this Sunday session has opened. Remember, this is a very early look at the Asian session. So as we get our very first look at the week, it starts off with Auckland, Sydney, Tokyo, Hong Kong, Singapore, etc. And that's what we're looking at. It's a relatively low volatility time of the day, and it's turn my light off. And it's also definitely a time where, if we're looking at sentiment, this isn't necessarily what we're going to see when we get to tomorrow. What is wrong with my light? There we go. I think. So we want to just keep in mind it's just a really, really early look at what's going on. Do I trade Sunday? I get that question sometimes. I do not. I'm usually working on the finishing touches of the newsletter for the week, and there will be an issue of This Week in the Market going out tomorrow morning. And this week's, I touch on a lot of topics: earnings, market breadth, the current expectation for hikes. So if you're looking for clarity and a plan around those topics, definitely check out This Week in the Markets over at thisweekinthemarkets.com. All right, so let's get to it. I'm going to start everything off with the NAS, because ultimately this is the reason we're seeing the rising tide in the S&P. And if there is strength in the corner of the Dow, it's mostly because of its weighting in tech. And as I like to remind my Sector Secrets Mastery folks, there is a king sector, there is a queen sector, whatever you want to call it, but there is a most important sector, and that is XLK. And XLK should then, as you think about what that means, aside from being the number one sector in the NASDAQ, it's the number one sector in the S&P, and it's basically Microsoft and Apple. Yes, there are other stocks in there, but these two are the most heavily weighted symbols within it. And as long as Apple and Microsoft continue higher, very difficult for XLK not to, right? So we think about sort of lifting the hood on the indices and on the sectors and seeing what individual stocks are weighted within it. And it's always, when it comes to the important sectors that move the S&P, NASDAQ, and Dow, they are all high concentration weighted sectors, gang. So there is that. So for the most part, S&P can sort of coattail the NASDAQ, but there is really two problems, and one is the financials. Right? We definitely need financials above 34. And the other problem, although not as significant, but it's a bigger problem for the Dow, is this thing right here, and this is healthcare. Right? Healthcare continues to be a corner of the Dow and of the S&P, and not even a consideration in the NASDAQ that's sort of holding it back. Right? We talk about relative outperformers. The word relative is really important. And for a lot of traders, we just say that, but we don't think about, well, relative to what? Well, what we're talking about is relative to the weighting within the indices, right? And that's where we get this hierarchy of sectors. And that's kind of where I'll start off my analysis, every single week. All right, so kicking it off with our first question from Nick, who asks, what's my take on the euro? Sure. You're looking at the euro versus US. I'm just going to jump on over to 6E, Nick, if that's okay, because we don't have a lot of traders in the US or really within the simpler community that are Forex traders. I love Forex, don't get me wrong, but I think 6E is more accessible to a broader group, and it's going to move just like the 6E. So my take is, remember, aside from the non-farm payroll miss and the tick up in the unemployment, the main story around the dollar, I think, really is at this point twofold. On one hand, we're at the tail end of the hiking cycle here in the US. 1/4 point hike is absolutely priced into the July meeting. And then after that, it's most probably a pause, but there's a possible 1/4 point hike sort of waiting in the wings, but it's not the probability, it's a possibility, right? Okay, so the US is at the tail end of its tightening cycle. But the European Central Bank, as opposed to the Federal Reserve, is not. The European Central Bank is still hiking, and as long as they're hiking, the euro should be able to outpace the US dollar. So the question is always, is the euro in an uptrend ideally with both US dollar weakness and euro strength. And I would have to say, for the most part, yes. But if the US dollar were just to sort of get stagnant and the euro continues to move higher, that would be enough to keep the euro US FXE, the 6E moving higher, right? So at this point, the dollar has been weaker, right? It has generally been weaker. It's just, are we waiting for opportunities to short into resistance on the dollar and equally buy into support on the euro? That 200 exponential has been actually really powerful for that. So yeah, I think the dollar has been generally, right? I don't know what your look back is though, right, Nick? If I'm looking at 2023, the general gist of the direction for the euro is up and the general gist of the direction for the dollar is down. But I think this is really very much a European central bank narrative. The further we get into the year, and really less about the US central bank, because we're not going to see a pivot likely unless the Federal Reserve hikes us into a recession or we have some sort of unforeseen issue. I think the commercial real estate narrative could be very interesting in Q3 or Q4. But for the most part, this is very much a European central bank. They've taken over the narrative now. All right, next up on my Darvis, sometimes my 1 day, 30-minute chart. Let's see here. Gone to Earth. What's the question here? Oh, do the lines not matter? Plum low, first box. You know what? I'm not quite Gone to Earth. Could you rephrase the question? I'm not quite getting what the question is. On the 1 day, 30-minute chart, the plum low first box is on the top. Yeah, I'm sorry. Maybe it's a Sunday thing. Gone to Earth. I'm not following the question. Could you rephrase that for me? And I'm happy to dive back in. Okay. All right. I'll keep an eye on that. And if you have an example chart, that probably would help as well. All right. But if the question is, do the colors of the box matter? No, the colors of the box do not matter. If that's the question, Gone to Earth, the colors, no. It's just an easy way to pair up the lines to each other. So yellow belongs to yellow, but no, the colors don't matter at all. No, not at all. Yeah. So if that's the question, yeah, the colors don't matter at all. Yeah. Thanks for the question. Let's see. Jack's asking, may I ask your thoughts on ITB, Pulte? Will higher interest rates affect this sector? Well, they already have, right? And remember, the stock market is always looking ahead. We already knew about rate hikes Q3 of last year. So if someone were to ask me, when did equities, including something like ITB and XHB and Pulte, when did they know rate hikes were coming? Q3, early Q4 of last year, right? That's when everything starts to adjust, right? That's when everything starts to get kind of wonky. The further we get into the rate hikes, the less the market is concerned, because we're getting closer and closer to the end. So remember, the markets are always front running what's around the corner. And the only time we respond to the now is with data or unforeseen events, right? And the Federal Reserve hiking rates wasn't necessarily unforeseen. They talked us through how inflation wasn't transitory, and then eventually that they were going to have to tighten. And then now, the question is, for how much longer do they tighten? So we're at the end of it. So higher interest rates have already affected the sector. That was back in probably Q3, Q4, Q1 of 2023. Now, Jack, the narrative is they're going to cut eventually. We're going to see mortgage rates level off, and we're going to start to see those things positively affect ITB. And frankly, ITB is up all year long, right? ITB is trending higher already. So it's not just interest rates that are obviously moving ITB, XHB, Pulte, right? So we always have to ask ourselves, if we have a narrative that's by and large negative to a sector, is the sector responding in kind? Because if it's not, right, higher interest rates would be considered to be a negative narrative, right? But if we're moving higher, then obviously that's either already been discounted, it's looked over, or there's another narrative that's at play here. So that's what I would say. It's just something else in play. It's not higher interest rates at all any longer that are affecting these. And I would buy the dip. Yeah, I would focus on buy the dip. Jack? Yeah. All right, next up, Glenn asks, buy the dip on SPY or worry about the Gravestone Doji on Friday's candle? Uh, let's take a look. Now, if I'm going to look at the SPY, I'm actually going to look at the ES first, Glenn, right? Because the more complete 24-hour look at the S&P is not SPY. That's a 9:30 to 4 window, right? This is nearly 24 hours. It's really 23 hours of trading. And I don't see anything on this chart that suggests that I should be doing anything but buy the dip. Right now, when we jump over to the SPY, right? So the question is about the Gravestone Doji. We worried about, I never worry about a candlestick. In and of itself, I never worry about a candlestick. What I ask myself is, where is that candlestick happening, right? And I think what's even more interesting is this candle from Thursday closed a gap that triggered from the 29th to, you can see, the 30th of June, we closed that gap. So when I think about what's relevant to price here, I see a volume ledge, I see a gap close, and actually I see a more of a continuation conversation. But I guess the real answer is, Glenn, I'm not going to let a Gravestone Doji become analysis in and of itself, and I don't believe that's what you're asking either. What I'm going to ask myself is that candlestick happening somewhere where there are other reasons to be bullish or bearish? Is it happening at a support or resistance level? So when I take that pattern, that candlestick pattern, and then add it to other relevant data, Darvis, volume, anchored VWAPs, things like that, then I can get a better idea. But I'm bullish. I'm bullish, and I want to buy, most definitely want to buy the dip on ES and SPY, on XLK, on XLC, on XLY. Yeah, for sure. All right. Next up, what are my thoughts on TLT below 100? So again, just like the earlier question, we're going to go to the futures contract. I would be very cautious of TLT. So this is an interesting chart. When I look at bond futures, it's a long bond, right? When I look at bond futures and I see that the U.S. central bank should be at the tail end of the tightening cycle, and we are still seeing higher yields, there is another narrative at work here, right? There's absolutely another narrative at work, because if we're at the closing in on the end of a tightening cycle, that means that the pause is what precedes finally a pivot and therefore cuts. That is not at all what's working its way into bonds. I'm not going to presume to know every narrative and nobody does, that's affecting any market. What I will say is it's trying to turn into a downtrend, and that enough is probably going to justify my staying away. Same thing with ZN, your 10-year and your long bond, both sitting at what could arguably be considered a double bottom between the March lows and where we are right now. But what are my thoughts specifically about TLT below 100? We are at a level that if we don't get, I believe, this week and in this zone some support, we could see lower lows. I mean, that's the way I look at this. Yeah, that's the way I look at this. And again, why are not rates, and this TNX, of course, would be the 10-year yield, right? So TLT is the 30-year, TNX is the 10-year. If we don't kind of top out here near those March 2 highs, then we could see obviously higher yields, which would mean lower lows on ZN. Which, by the way, IEF is the ETF that corresponds with ZN. And then, of course, we have ZB with the TLT ETF. I think we're right at that point where decisions are going to have to be made. It's going to be our job to determine whether or not we want to engage at that decision level or just see how it shakes out. I'm probably of the latter camp. I'll just see how it shakes out, because I think there's a lot of other trending environments that I could prioritize allocating my capital to versus, a choppy market that could be on the precipice of continuation outside of the zone, which is a very tricky area. Yeah. So great question. I would say let's just see how it shakes out. Yeah. All right. Next up, D-Dog. Sure, Calmont. D-Dog is in an uptrend. I would buy the dip. It's above the 200. The dip could be a volume ledge. The dip could be Darvis, but I would wait for a pullback. The closest I would even consider a buy would be around 93.80 on D-Dog. So if we can get a pullback, great. If not, I would not engage at higher highs. However, even a shallow, well, one thing we could think about doing is shortening the time frame, right? And look at a 60-minute or something alternative to the daily if you're looking for higher highs. I would not pick a top here at all. I would wait for that pullback and try to get long. All right. Matt asks, we always trade the technicals in front of us. Well, not just the technicals, Matt. Price, volume, volatility, time. But yes, we trade what we see, not what we think. You got it. But do I have an opinion on the macro factors that seem to be holding healthcare back? Matt, I really don't. I really don't have any. No, as far as now, remember, if I'm talking about macro, the macro picture of healthcare itself, or the bigger picture, I really don't know. I really don't know. I've seen a lot of things that make sense, but this is where I'm just going to leave it alone until I start to see fund flows show me that money's interested in this again. I'm going to wait till volume shows me that money is interested in this again. So I really don't, Matt. And in fairness, I haven't looked all that much. Usually when I'm looking at macro, it's macroeconomic, and that's going to be jobs, growth, inflation, and then how that's affecting the broader averages. But as far as specific to the bigger picture look of healthcare, I don't know that I've gotten past just until this name, UNH, can get out of its own way. This thing is a mess. It's a choppy, bearish mess. And it happens to be the number one weighted sector in XL or stock within the XLV healthcare sector ETF. So until UNH gets with the program, that to me is the main, that's the main thing I'm watching right now. So macro, no, but individual stock weighting, yes. And it just continues to be a corner of the markets that is not, it's just not seeing flows. It's not seeing attention. We're not getting volume ledges. So I'm going to leave it alone because, again, it's really a matter of, are we seeing rotation? No, we're seeing more participation in stocks and sectors that were already strong. And that's going to leave healthcare on the sidelines, because until we start seeing profit taking in, say, tech, we're not going to see the other part of sector rotation, which is the bargain hunting that one would presume would benefit healthcare, but has yet to do so. Yes? All right. Okay, moving on. What is the next support level for the S&P? Okay, so if I'm looking at the daily chart of the S&P, near term, I would look at 44.20, that area around 44.20. After that, I would look at 44, say 70. I'm looking at the automated Darvis, Martinez. I'm looking at the automated Darvis levels for that, and we could look at volume ledges, which this Darvis here, the one at 44.20, does have a little bit of a volume ledge. So I would keep an eye on those two Darvis levels. All right, next up, the DXY is trading below. Here we go. It's trading below the 200 EMA. It sure is. If possible, what's my take on DX versus Euro? Yeah, it's everything I mentioned before. I'm still bearish dollar. I'm bullish Euro. If we can engage either near the 200, that's my preference. Yeah. Would I short the 6E as a dollar may bounce? No. Look, if we want to play shorter term bouncing, I'd probably do that on the 60-minute chart. But I'm really not interested in bounces, although we'll say 102 could be interesting. But no, I'd rather wait for the Euro to pull back and buy it. I'm really, and I think the difference is the longer time horizon. I have a much longer time horizon. So anytime that I've engaged the 6E, because I'm looking at it from the standpoint of the central bank continuing to hike rates, my preference has been focusing on opportunities like in February and March, focusing on opportunities like we saw in May and June. So no, they're not going to come often, but they're going to come as we close in on that 200. All right, next up, snow is looking interesting on the daily. All right. I don't know how interesting a non-trending chart looks to me. I'll tell you what, RD, not normally. Interesting to me is going to be a trend, right? But it's above the 200. We do have some Darvis levels. To me, this is choppy, to be quite frank. But as far as the 1 hour goes, is it in a downtrend? I think it's a lot of chop RD of again, I think sometimes for me, right? I don't know how each one of us, right, builds a watch list, but for me it's always relative performance. It's always relative performance. And if I'm going to build a watch list based on relative performance, something like snow is just not going to make the cut because it's choppy. Although it's bullish chop, so yeah, I'd focus on the long side. Uh, I think that right now, well, let me put it this way: this is only the second time since the beginning of May. Actually, third time since the beginning of May, or was that late April? All right, this is only the second time since May that we've had an oversold slow stochastic in this choppy environment. Right in here. So that this was back in here, April, not quite oversold. So we have an oversold slow stochastic. So I would say look for the long side as this chop is near the oversold zone. And that's something I would keep an eye on. All right, next up is so buy 6E short. Yeah, that's what I'd be focusing on. Yeah, Miles. What's my thought on crude? Oh gosh, talk about chop once again. I've got preference for bullish chop, Jeffrey. So if I'm looking at crude, I'd rather be long than short. Wait for the daily price movement range to be in play. Again, very difficult. Of all the things I could be looking at, gang, I got to tell you, my focus has been tech stocks, semiconductors, maybe a handful of financials. If you're looking at a stock that's just back and forth chop, or you're looking at a sector or an individual commodity that's in chop, please, my thing is, before, yeah, I could break down crude oil and tell you I'm bullish, but right now it's possibly overbought. Thank you, slow stochastic. But I guess the question is always, why do I want to trade crude? What is it about crude that's giving me an advantage trading it over, say, a trending stock or a trending sector? Again, knowing that capital is limited. All of us have limitations on capital that we can deploy. So then I asked myself, of all the places I could put my limited capital to work, right, would it be crude? And it probably wouldn't be. However, the daily price movement ranges have been very, very good. Adjust for some noise because it's been noisy, but I would say the long side has been, for the most part, my preference. Yeah, that's where I'd focus. And, maybe it's not the daily time frame that's ultimately going to be the best opportunity. Maybe I'm going to have to shorten it to the 1 hour and play the daily price movement ranges bouncing there, or take a look at the 200 propulsion. Yeah, Jeffrey, take a look at the 60-minute time frame of crude oil futures and the 200. That looks actually really, really interesting. So I'd keep an eye on that. So it might not be the daily time frame that has the best clarity. It may not be a certain symbol that gives us the best relative outperformance. But if we can be nimble about what we're going to trade and which time frame we're going to trade it on, therefore which time horizon, we might find opportunities to control risk. So I would say, one of the things that the bot did in the Sector Secrets Mastery is she put traders in Exxon, which I love, because if I'm willing to buy crude, I'm likely willing to try to take advantage of continuation in Exxon, right? But I would be, generally speaking, long. Yeah, I would be long. Great questions, gang. Good stuff. Good stuff. All right, I think that wraps up our questions. So as always, gang, thank you so much for being here on a Sunday. Thank you for being that crew that prepares for the week on a Sunday evening. That way we're ready to hit the ground running on Monday. Thanks as always for being a part of not just our Sunday show, but our Charts and Coffee crew. I'll caffeinate and dominate with you all tomorrow, 9 a.m., same time or same channel, 9 a.m., same station, and enjoy the rest of your Sunday. I don't know about you all. I'm finally catching up on the third season of Mandalorian. Got the last two episodes on tap, so I'm going to go enjoy that. Enjoy the rest of your day. I'll see you tomorrow for Charts and Coffee. Be good to each other, gang.